Hey everybody, great to be with you again to talk about our market, where it's at, where it's been, and where it's going. This is our second quarter market update, building off the first one that we did, and as I'm sure you've seen. So we'll dive right in. The quarter one recap, I would say, is just as mentioned in the last market update, was very strong, robust, a lot stronger than we expected in terms of activity, demand, and even appreciation. Quarter two is ending very similarly. We're seeing a lot of movement in the market, things selling pretty quick. And I would say prices so far are up to about 3 to 4% market-wide, taking quarter one and quarter two combined. And then specifically Tier 1, Tier 2, and Tier 3 properties, want to mention something about that real quick. What we're seeing, what I would consider a Tier 1 property, you know, the wow property when you walk in or see online, and it's staged beautifully, priced correctly, no major flaws. Those homes are selling literally in a day or two with multiple offers and going above list. Tier 2, you know, maybe it's got a lot of those qualities, but maybe there's one or two things missing. You know, maybe it hasn't had market or cosmetic updates in the last 15 years, but it really has everything else. Those properties are sitting, I'd say, more 30 to 45 days and having to actually go through a few price drops. And Tier 3, maybe something that needs quite a bit of work and revisioning. Those maybe are going to be on the market for 90 days and several price drops. So just something I wanted to share, because while we're seeing great appreciation and strong demand on the market, if you really break it down in property condition and types, you are seeing some things acting a little differently currently. As far as inventory and supply numbers, real quick, as I've mentioned before, the way we measure our supply and demand in our market here, or really anywhere USA in real estate, is a 6-month supply is considered an equilibrium market. Buyer-seller demand meeting in the middle, and typically you're going to see 4 to 6% appreciation there. Once you get below 6 months supply, you're getting into more of what I would consider a seller's market, where demand is actually outpacing supply. And vice versa. If you're above 6 months, well, then now you're starting to get more in a buyer's market. So currently where we're at in our market is a 3-month supply. That's where we were in the first quarter also, which means certainly we're well below the 6 months in a very strong seller's market currently. If we break down some of the price bands, 0 to 500 is right at 2.84, call it 3 months. The $500 to $1 million price band is actually up a little bit, I'd say 5 to 6 months. The $1 million to $2 million, right around 6 months. And then interestingly enough, once you hit 2 million to 4 or 5 million, you're then actually dropping back to 3 months supply. So we're really in a market, just as I mentioned in the last market update, where you're seeing the bookends, where the entry level and the very high end are outpacing the other parts of the market in terms of supply and appreciation. Breaking that into areas. If we're core central urban neighborhoods, urban locations, I would say up to about 1.3 million, you're certainly undersupplied at 4 months or less. If you take it one layer out, let's say to the Domain or the Arboretum or Southwest, areas like Circle C, but you're still within city limits, you're seeing up to about 800,000 being undersupplied at 4 or 5 months. And then above that, you're starting to see some oversupply. And then if you go out to the suburbs, Round Rock and areas such as that, that's where up to about 600, it's very strong demand, less than 3 months supply, and above that, you're starting to see some oversupply. What's driving our market currently in some of these statistics I'm sharing with you? I'd say 3 or 4 main things. Job growth, which is always kind of our #1 driver or lack thereof. We're currently poised to see 5% job growth this year, which anywhere USA would be an incredibly robust economy. And actually Wall Street Journal just named us the hottest labor market in the country. So on the heels of those things, you know, seeing 40,000 jobs a year certainly drives our market and is a big part of why we're seeing the activity we're seeing this year in our real estate market. Two, interest rates have banded down recently. That's kind of created a little bit of a punch in the market with the rates dropping down around 3 3/4. The migration continues to be super, super strong. We'll probably see another 50,000 people migrate in this year. That certainly has an impact on our market. Interestingly enough, markets such as California, Florida, New York, Illinois are the biggest in migration, as well as we're seeing more international migration than we ever have in our market. Those are really, I think, driving what you're seeing in that upper price band of 2 million plus. It's a very interesting part of the market that we intend to keep an eye on. So those are kind of our main factors there. Tariff concerns, some people have mentioned, is that going to slow down our market? I don't think it is when our job growth and our migration is what it is. I don't think at least this year that's going to show up. As far as what the future holds in the rest of this year, appreciation, I think we're going to end up at about 7% for the year. So 3 to 4% in the first half and about another 3 to 4% in the second half, based on all the factors I've shared with you. I think you're going to continue to see really strong demand in that tier 1 type property that I was mentioning earlier. And then I would say specifically, probably the most active parts of the market in terms of days on market and supply being lowest will be your city limits, not the core central, the first layer, but the city limits layer, and also suburbs. So that's about it. Great to be with you guys as always. Reach out on any of this that I've shared with you in terms of any questions you may have, and look forward to being with you guys next time. Also make sure to go to our website, tarekmorshed.com, for market updates from the past as well as other relevant monthly articles.